Great to have you join us for another episode of Business Morning here on Channels Television. Good morning and welcome. I'm Ini John Mekwa. Well, a lot is happening in the global oil space, talking about the price. And on another hand, the Organization of Petroleum Exporting Countries and its allies as OPEC Plus are expected to meet next week, the 2nd of March, to decide the next line of action over the agreeable amount of oil its members would pump in April. All this comes as two key OPEC members, Nigeria and Iraq, affirmed that the strategy employed by the 23-nation alliance to gradually raise oil production is enough to balance the global oil market. Nigeria's Oil Minister of State for Petroleum Resources, Timothy Silva, said that at an oil event which is going on at Doha, the capital of Qatar, that there's no need for more supply of barrels of crude oil than the current plan, as the market would be expecting more production if a nuclear deal with Iran works out. Back in Nigeria, the House of Representatives has mandated the Committee on Insurance and Actuarial Matters to investigate the incidences of fake insurance certificates in the country. The resolutions at the plenary follows the adoption of a motion on the matter by Honorable Liam Taiwo. While representing the motion, the lawmaker also pointed out that insurance companies and brokerage must have operational offices in major cities in the country.
The statutory laws of the country stipulate that no motorist should fly Nigeria road without having a genuine insurance certificate. However, most motorists have continued to show absolute disregard for the statutory requirements. He has also worried that the number of vehicles with fake certificates on Nigeria road has risen to 9.4 million, and the figure released by the Nigerian Insurance Association revealed that only 2.72 million vehicles on Nigeria road have valid insurance covers as at February 2021. I was also worried that the millions of vehicles, trucks, motorcycles plying Nigerian roads are not insured. The House hereby resolved to urge the insurance companies and brokerage to have operational offices in major cities of the country. The House also mandated the Committee on Insurance and Actual Matters to investigate the incidence of fake insurance certificates in Nigeria and report back within 6 weeks for further legislative action.
Well, some other things happening in the business scene now are the total currency in circulation in Nigeria closed the year 2021 at an all-time high of 3.33 trillion naira. This represents a 410 billion naira increase when compared to 2.91 trillion naira, which was the rate in December 2020, and also 19.06% increase from 2019. Now, what does this say about the efforts to promote cashless economy and e-transactions? And what impact actually does it have on the economy? We have Damilare Shimiyu, senior analyst at Afrinvest Securities, now to share his thoughts on this. Hello, Damilare. Good morning. Okay, so Damilare, with this available data from the CBN put in circulation at over 3 trillion naira at the end of 3.29 actually for January 2021, that's even higher than what we had December 2021. That's the highest so far. What does this mean for the Nigerian economy, especially at a time when e-transaction seems to be what the CBN is preaching? If you please unmute and let's hear you. Damilare, I think you should unmute. We cannot hear you.
How about now? Can you hear me now?
Yes, we can hear you now.
All right, yeah. So thank you very much. Let me begin by first highlighting the 4 factors that I think drove the high level of currency in circulation before speaking to what this means for the economy. First is that we have a very weak credit system. As of 2020, when Statista conducted a survey on African countries in terms of credit card penetration, it's quite interesting to note that Nigeria does not rank among the first 20 countries in terms of credit card penetration in Africa. As a matter of fact, credit card penetration in Nigeria sits just within 1%, according to the data, compared to countries like Mauritius with 23%, South Africa almost 10%, Namibia with 11%. So what that means is that a lot of household transactions, as a matter of fact, estimate shows that more than 80% of household transactions involve either direct payment of cash on instance or transfer from the bank. So when you have a country where credit system is very weak, it becomes difficult to control the level of currency in circulation because people need money to at least meet the day-to-day end needs. So that's a major factor. We need to gradually move towards what the kind of level we are seeing in advanced country, whereby people can even make purchase of any commodity or any item of their choice ahead of the time they will get paid, maybe a salary or something like that. So our credit system is a bit weak. And second is the fact that we have a very high financial exclusion rate. As of 2021, when Ethereum conducted its last financial inclusion studies, the data revealed that we have about 48% of bankable Nigerians, bankable adults of about 106 million, who are financially included. So meaning that we have about 54% bankable adults in Nigeria who are outside of the regular financial services. So people in this kind of category, this 53%, which is more than 50 million bankable adults, will surely do more of their transaction using cash. Another thing which also supports the large cash in circulation is the fact that we have a very large informal sector. This has been estimated to account for almost 60% of Nigerian economy in terms of GDP. And if you want to take sample of this, you can go to a typical market in Nigeria, and it will interest you the number of market women or market men who you transact with. I will either require you pay on the spot, not even to allow you to do a bank transfer. So all these fuels large volume of money in circulation, plus the fact that Nigeria had to spend its way out of recession, which is the fourth point. We all recall that Nigeria slumped into recession in 2020 following the impact of the pandemic, where the economy contracted by 1.9%. So by our own estimates, between then and now, the federal government, mostly from the CBN side, have expended more than 2.8 trillion. And part of this injection to stimulate the recovery of the economy came in the form of cash, especially when you look at the large number of people on FG's conditional cash transfer list. Last year, FG increased the number of beneficiaries on the monthly 5,000 stipend conditional cash transfer to 3.5 million. So if you have 3.5 million people who are depending on 5,000 naira cash every month, I mean, you won't expect those kind of people to facilitate that transaction online. Bulk of that transaction will go via the usage of cash. And also, the business environment here, especially when you come to retail business, have not really supported, online transaction, online payments for most of transactions. So basically, these are the four factors that drove the increase in currency circulation. Now, in terms of impact on the economy, right? So when you have a very large currency circulation,
so Damilare, just before you go to the impact, can we also list issues like efficiency and trust of the available e-channels as a factor?
Well, I think the efficiency of the e-channels in Nigeria have improved significantly. And I can tell you because last year, during our banking sector reports, which we titled Resilience Amid Endemic and Pandemic, released last November, the data we analyzed shows that digital transactions, online transactions by bank rose by 256% between the time the pandemic struck and when we're doing that survey. So it means the survey question also accommodate people sharing their view on the quality of services they enjoy from their bank. And on average, we have a positive response from people. So the banking sector or the financial services sector in Nigeria are continuing to improve in terms of efficiency. In fact, in terms of response to complaint and everything, the survey revealed that on average, people get response to their request or their complaint within 24 hours, so which is very decent. So, but I think the problem is the fact that we have a lot of people in the informal sector. We have a weak credit system, and the country just spent its way out of the recession, because prior to the recession in 2019, currency circulation only rose by about 4.9%. But in 2020 and 2021, it rose by about 16 and 19, about 19 and 16%, so which is quite huge. And these are some of the factors that are fueling it, as I've earlier highlighted. So in terms of the impact, right? So large volume of currency circulation makes it difficult for CBN monetary policy to be effective, because, for instance, if CBN is trying to reduce liquidity in the system, it's easy to do that by selling OMO auctions to bank. They can easily mop it, but CBN will not transact with you and I. If I have a cash of 1 million in my house, CBN will not have opportunity to mop up that. The same thing with the trader on the road, selling beans, selling corn. So when you have a large informal sector, when you have a weak credit system, when there are a lot of people that are financially excluded, you cannot whisk away seeing the currency circulation being as high as what we are seeing in Nigeria. So it makes monetary policy to be weak, and also impose a lot of costs on the CBN in terms of maintaining currency. Printing new currency, because between 2014 and 2019, data shows that CBN spent above 200 billion reprinting new banknotes. So it's huge, because when you have a lot of currency circulation, part of it will go tattered, part will get teared, and CBN will need to recycle all this every day. So those are the effects of the economy.
What about inflation? Does it have any effect on inflation?
Yeah, so large currency in circulation is both a cause and an effect of inflation. It is a cause of inflation because when there are large volume of money in circulation, the tendency for marginal prices to consume to go up is very high. For instance, if I'm traveling from Lagos to Ibadan and all the cash I have on me is just my transport fee, even though I may see a lot of commodity seller by the roadside, I won't be able to buy because those guys will not allow me to do transfer to them. So I'll just close my eyes and go. But if I have the cash with me, I will see chin-chin, I'll buy, I will see this, I'll buy. So basically, yeah, it can fuel inflation. But when you have large currency circulation, it fuels. There is an effect. The effect side is that when general prices is high, people's share of cash, or the cash they want to hold, maybe for transactionary purpose or precautionary purpose, will increase. For instance, if I don't need more than 5,000 to fuel my gas in a month, I don't need to keep more than 5,000 on my pillow to do that. But if it costs me 10,000 naira to fuel my gas in a month, you agree with me that that's exactly the same amount I would put. So high currency circulation is both a cause and effect, but more a cause than an effect. Most of it is both a cause and an effect. It has significant impact on inflation dynamics.
All right, and then it's pre-election year, and I know you noted some of the factors that may have increased this currency in circulation. But in a pre-election year, it's expected that there actually be, more cash flowing among the politicians to the people. How should the CBN respond to this?
Yeah, so the truth is, one of the key objectives of the CBN is price stability and exchange rate stability. And you cannot achieve price stability if you lose track of the control of currency circulation. But the sad part in the case of Nigeria is the fact that we have a weak credit system, like I mentioned, and we have a large informal sector. So it may be very difficult for the CBN to be able to keep currency in circulation in check, especially as we approach the election period, which from history, we know is always characterized with a lot of cash moving around. I recall that in 2014, which is a pre-election year like 2020, 2022 that we had, cash in circulation jumped almost 24%. So because the CBN can easily mop liquidity when it is within the banking system, but when it's with individuals, when it's in the pocket of within the control of individuals, it becomes very difficult. But we know the CBN will do their best, but the level of effectiveness may be very weak given the earlier highlighted challenges.
And Also, e-Naira is supposed to help with the issue of financial inclusion. I know you said one of the major factors here is financial exclusion. Can it be used, you know, to mop up the currency in circulation?
Yeah, the first thing to consider is the fact that the e-Naira, what has been the level of acceptance, right? So even currently now, I think the e-Naira is mostly operating in major cities, Lagos, Abuja, and Port Harcourt. It is not something that has been fully embraced across the country. And I can tell you for a fact, if you randomly pick 100 people on the street and ask them to fill a questionnaire if they have an e-wallet or the e-Naira wallet now, I'm sure you have more than 60 or 70% of them who don't have the wallet for now. So the e-Naira project or the e-Naira concept have not really gained the level of ground that will make it easy for the CBN to be able to manage system liquidity leveraging that. It will have been a very good tool because it's more of keeping away the paper notes, which is the real currency circulation we're talking about, and makes it easy for CBN to manage system liquidity. But because the level of adoption or the level of acceptance is still very weak. I mean, I just launched it last year, November, I recall. So I don't think it has gained significant ground to that level that it could be a form of a joker for the CBN to manage system liquidity.
So what do you think should be some of the, you know, maybe immediate steps that can be taken at this time to deal with this high rate of currency in circulation? Or do we just stick with it and see where it leads us to?
Yeah, so I think one of the factors I forgot to mention, which is one of the cause of high system liquidity, is the fact that we have a low investment yield environment. So one of the reasons why people want to hold cash is if the yield on potential investment around them is not attractive enough. I mentioned earlier that system liquidity only rose just by 4% in 2019. Now, that same 2019 was a pre-election year, right?
Yeah.
I mean, it was an election year, Sarah. But in 2019, the yield environment in Nigeria was very attractive. Yesterday, the Omo auction that was conducted saw the 365 days T-bills just offer about 5%. So you need to put in huge amount of money for that to attract you. So, but in 2019, yield environment, even for a treasury bill, was in double digits. So one of the things that can actually drive a quick win in terms of managing system liquidity is an improvement in the yield environment. But trust me, that's not a route that the CBN or the government will want to consider now, especially given the fact that as of November 2021, we're doing about 76% of our revenue servicing debt. So it will impose a cost on the government, and I don't think the CBN will even want to go that route now.
All right, Damilare, well, I guess the CBN has a lot of thinking and planning to do to find a way to mop up this excess currency in circulation to avoid some of the consequences on the economy. Thank you so much, Damilare Ashimiyu, Senior Analyst with AfriInvest Securities, for sharing your thoughts with us this morning.
Thanks for having me on the show.
So we'll take a break now. When we come back, we'll continue with another line of conversation. It's Commodities Day on Business Morning here on Channels Television. Hey, welcome back. You're still watching Business Morning on Channels Television. Now, oil prices surged with Brent bridging $100 a barrel. And that's the first time since 2014 as Russia attacked Ukraine, exacerbating concerns that a war in Europe could disrupt global energy supplies after Russian President Vladimir Putin authorized what he called a special military operation. Ukraine's foreign minister said in a tweet that Russia had launched a full-scale invasion of Ukraine and was targeting cities with weapon strikes. Brent crude hit a high of $102.48 a barrel, the loftiest since September 2014, and that's adding $5.22, while U.S. West Texas Intermediate crude futures jumped $4.85 to $96.95 a barrel after rising to as much as $97.40 That's the highest since 2014 August. Russia is the world's second largest oil producer, mainly selling its crude to European refineries, and is the largest supplier of natural gas to Europe, providing about 35% of the latest supply. Well, we have Adesola Sumoni joining us now from UK to tell us some of the implication of this invasion of Russia in the Ukraine, of course, in the oil space. Hello, Adesola. Good to have you second time this week.
Hi, Ini. Thank you for having me on the show.
Good to have you again. So oil prices have been volatile this week. First, it was a threat, prediction, wait and see, tension, and now finally we hear that Russia has invaded Ukraine, at least part of Ukraine. So first of all, what is this, seeing the position of Russia in the chain of oil production, what else can we expect from this?
Thank you for that question, Ini. So, like you mentioned, Russia is a huge producer of oil globally. I think they account for around 12% of global oil supply. And now with this escalation in Russia-Ukraine tensions, and with sanctions also coming from the US, coming from the UK, EU, Germany, I think it now is an issue of Russia, which is also a large supplier of natural gas in Europe, could then retaliate to these sanctions by cutting their supply, and that could have significant implications. Already, some analysts are seeing oil prices reach as high as $120, $150 per barrel in the coming weeks if we see further escalation in Russia-Ukraine tensions. In addition to this, we are seeing a robust revival in oil demand growth to pre-pandemic levels. We are seeing record low levels of crude inventories in developed countries. So all of these factors are pointing to the fact that we also see OPEC Plus struggle to meet its production target of increasing output by 400,000 barrels a day every month. So all of these factors are pushing oil prices upwards. And if we see further escalation in Ukraine-Russia tensions, or if we see Russia retaliate to some of the sanctions that has been levied on it, then oil prices are going to even increase sharply.
Yeah, but we also have the ongoing talks with US, the nuclear talks going on there. So that's also one area that we could see supply. I mean, what effects can we expect from that area?
Okay, so like you said, the US and Iran, they are reaching like an important point in the nuclear agreement. And if that is agreed, if the agreement is reached, then we might see some exports coming from Iran. I think around 1.3 million barrels per day coming out from Iran, but that is not likely to happen quite soon. So maybe later in the year, but that would moderate some of these effects. I think it will take off at most around $5 per barrel on oil prices. It will definitely moderate it. Also, we're expecting to see some oil coming from US shale producers. Like I said, the higher oil price environment is becoming attractive for even high-cost shale producers. We're also expecting some oil coming from non-OPEC plus producers, such as some oil producers in Canada and Brazil. So this would moderate the rise in prices, but not so much.
Not so much. And then OPEC is meeting next week, the 2nd. Already Nigeria and Iran have voiced that they don't think more the output should be increased. What do you expect from that meeting, actually?
Okay, first, OPEC has struggled to meet its targets already. So there's that. I mean, as of last month, the International Energy Administration said that, OPEC missed its target by around 900,000 barrels per day. Yeah. So there's that backdrop already. Also, we know that the oil market is tight right now. So there's kind of some incentive to increase. But I don't think at this moment, I do not think that OPEC would increase its target, because at the current levels, many of the member states are struggling to meet. In Nigeria, I think our target is 1.7 million barrels per day. We are still only able to produce around 1.4 million barrels per day because of some vandalization on oil infrastructure. Same thing in Angola and some other countries. So I don't think OPEC would increase their production target. For now, I think they will keep it stable, steady at 400 barrels per day. Also, remember I said that we're also expecting some oil to come on stream from non-OPEC plus members such as Canada and Brazil.
Yeah, so I mean, this would have been a very good time for Nigeria, if we're able to meet that quota. It would have really helped our reserve and helped us to pay a lot of debt. It would have been a good time for the country. Well, talking about other things now in the country, let's look at the Naira. We see that the Naira traded flat at the parallel market, 576 Naira for a dollar now. And external reserves are up by $50 million. That's week on week. What's the outlook for this from your perspective?
I think without sounding like a prophet of doom, I think we are still going to see some pressure on the Naira going forward, especially because as oil prices are still elevated and are projected to remain elevated for the foreseeable future. And that has implications for energy prices in developed economies, which is driving inflation in these countries. And I think that would trigger the central banks in these developed countries to move more aggressively to tackle inflation. So I think they'll hike their interest rates more aggressively, and that will have implications for emerging market economies such as Nigeria. It will probably lead to some capital flights, which will mount pressure on external reserves and the exchange rate. Already, capital inflows into countries like Nigeria are low. Also, Nigeria still has some FX backlog with expectations of a tighter monetary policy. So all of these factors suggest that the pressure on the exchange rate will still remain. However, our external reserves are still a little bit robust at $39.8 billion, and the central bank would continue to inject FX into the market. Currently, they're injecting, I think, around $1.9 billion into the market monthly. So that would kind of ease some of the pressure, but the pressure will still remain.
Yeah, but so you can imagine what that extra dollar would have gotten from the crude oil would have done for us, in that case. Anyway, yes. So looking at the aviation sector now, domestic airfares are up. I mean, I listened to one of our reports, and some people say a flight now is about 100,000 naira, up 100%. In some cases, flight from Lagos to Abuja used to be 22. Now it's about 50,000. We even had that on our Sunrise program. I mean, this has a whole lot of effects, widespread effects on the economy, on Nigerians, on inflation, and a whole lot of things.
Yes, it does. I mean, if you talk to the airline operators, they will tell you that their cost of operations have increased. Also because as oil prices rise, the cost of even jet fuel is also higher. I think it's now around 420 to 450 naira per liter. It used to be around 190 naira per liter, I think, a year ago. So all of these factors are pushing the cost upwards. Now, in terms of the effect, we know that air tickets or demand for air flights are elastic. And in economics, say elastic in the sense that small changes in prices, essentially consumers are price sensitive. Now, around last year, we saw quite huge demand in air flights because of high security challenges on the road. I mean, you could be traveling from Lagos to Ibadan, and then you get kidnapped and whatnot. So we see a lot of people choose going to the air. But right now, with the sharp increase in prices, I think, given also the elasticity of air flights, or the elasticity of flights, I think that less and less people are going to travel by air. Already, you've seen some pictures or videos on Twitter or Instagram showing that we are seeing empty flights really because of that. So I think the first effect would be on airline companies. Their top line and their bottom line are going to take a serious beating, and also because so there's that. But also the people who will be affected most will be frequent travelers within Nigeria. I think the average Nigerian does not travel by air, because obviously of high levels of poverty. So I think those are some of the initial effects, and I think something really needs to be done in terms of
because we can expect that by the time inflation for this month comes out, all of this will feed into the inflation figure, And that would be
Oh, yeah.
the reality of the country, of the economy.
Yes, definitely. I mean, if this price, sticks, not all price increases are inflationary, but if this, price increase sticks, or if it lingers, then definitely it's going to pass through to inflation, and that would again have a multiplying effect on other costs or other prices in the economy.
Exactly. Exactly. Well, okay. Well, talk us through some developments in the commodities space.
Okay, so talking about grains, wheat and corn, I think the Russian the geopolitical challenges between Ukraine and Russia would drive prices in the near term, because Russia and Ukraine are some of the largest producers of wheat and corn, particularly also for Nigeria, who is a huge importer of wheat. I think that's quite important, because if this tension escalates and it begins to affect Russia's supply of wheat and corn, then the cost of importing wheat and corn to Nigeria would also skyrocket. Already, the price of flour and other wheat-based products are elevated in Nigeria. So with this additional cost, I think that would also filter into domestic commodity prices. In terms of cocoa, I think the balance of demand and supply factors. For instance, we are seeing with the onset of rains, we are expecting better mid-crop harvest from some of the biggest producers in West Africa. Talking about Ivory Coast, Ghana, Nigeria, and Cameroon. And also, we are seeing on the demand side, we are seeing big demand coming from North America, especially as we approach Easter, with the Easter egg hunting season. I'm expecting big demand from North America, big demand from Europe. So I think the balance of this factor would determine the price. Also, we are seeing, as more and more countries lift the final restrictions of coronavirus, I think that will also be positive for demand for chocolate. And so I think overall, the demand is likely to marginally outweigh supply. So prices will still be a little bit on the high side. In terms of sugar, I think the big supply coming out of India is going to continue to moderate prices. So I think prices are going to remain under pressure, at least sugar prices in the near term.
All right, Adesola, thank you so much for giving us a wrap-up and update from the global commodity space, and enjoy the rest of your day.
You too. Thank you.
We'll take a breather now. When we come back, we'll head to the markets.
What? Now this is more like it, right? We want the best quality ingredients when we cook. When it comes to salt, we care less. We say salt is salt. Well, I care about my salt. It goes into my food and my body. And that's why I use Dangote salt. It's time to care about your salt.
Yeah, welcome back. Let's do an opening call to the market now. Well, it seems, Will, that excitement is short-lived. We're back to the red zone.
Good morning, Ini. Your sentiments in the equities market yesterday turned negative. And this is not surprising, because we saw at intraday it was flipping between the green and the red zone.
It should have been orange.
Yeah, maybe amber, to let us that it's going to take a pause. But right now we saw it tilting. So I was very much expecting it was, it to turn negative. And so when I saw the negative posting yesterday, I was like, okay, yeah, fine. This is what we saw at intraday. So profit taking in Dangote Sugar, which was down 5.3%, and GT Co were the culprits in this regard. And despite the gains recorded in MTN recorded 20 kobo yesterday, but it still did not, cushion the shock that, the drop that we saw from other, the pockets of the components that were down yesterday, 0.808% down at 47,207.27 points yesterday. The all-share index is still at the 47,000 level. We hope it remains there. And then the equity cap is still at the 25 trillion naira mark. Now, the activity chart yesterday, it was deeply in the red. The total volume of transactions decreased by 45.3% to 230.65 million units. Now, it was valued at 3.49 billion naira. Transacted in over 4,300 deals. Now, Transcore was the most traded stock by volume yesterday. It had a total of 23.19 million units traded, while Seplat was the most traded stock by value at 645.12 million naira. Now, we'll move on to the sectors, and we see that the It was quite mixed yesterday. We had banking, consumer, industrial goods in the red, and then insurance and oil and gas were the sole gainers yesterday. Now, we're going to have an analyst talk to us about that, but we'll move quickly to the unlisted market where we saw that it was a pretty dismal activity posting yesterday. They recorded a flattish negative in the negative zone yesterday, 0.0%. We're just hoping that there's a boost, and so that the activity chart was also reflective of that, poor performance and the unlisted OTC market. Now, Afolabi Agbenro is a stockbroker at Stanbic IBT Stockbrokers. He's going to tell us what is going on in the market while we're seeing this quiet, but not so this quiet trading in the market anyway. So, Afolabi, good morning.
Good morning, Will. Thank you for having me on.
Yes, Afolabi, you just sure you've been following and you've seen the report that we're getting right now. The banking sectors, consumer goods, they're pretty down yesterday. And MTN was up, but we're still having quiet activity, despite the fact that, well, this is supposed to be the earnings season for most corporate organizations. So what's really going on in the market? Can you walk us through the activity yesterday and give us a background, more insight into what's going on?
Sure. So we've seen in MTN in particular, we saw a lot of investors have started getting credited their shares from the offer that happened last year. So we're seeing in some instances, some are taking profits, selling around the 200, 199.80 levels, while some are actually just holding on because there was an incentive for investors that hold on to the shares for about a year to get a bonus. So we're seeing some investors do that. And that's why we're not seeing so much move in MTN. Yesterday was just 20 Naira that it gained on the day. This wasn't enough to offset the losses that we saw across some of the other counters, such as AfriPru, Dangote Sugar, Chams, Mutual Benefits, and ETI. Also looking at the banking sector, we've seen some activities over the past couple of days in the likes of Zenith Bank. It's been trading around the sort of 27 levels. We saw some very decent demand. Generally, what we're seeing is that a lot of investors are taking positions and are taking positions ahead of corporate earnings and corporate actions that are going to be declared very soon. Like you mentioned, this is the earnings season, and we've seen a number of investors actually just taking positions and waiting to receive, waiting to hear what the companies are going to what the companies are going to do and what dividends they're going to declare.
Okay, so I'm just going to talk about this stock, Alti Briscoe. What's going on with them? They've been gaining for some time now. Is there any clear direction as to what's driving the sentiment for the stock?
I think it's just speculation from what we're seeing. It's not one of the names that usually is on the gainers list. But from what we're seeing, it's just mostly speculative activities that are driving the stock up, the stock price up. It closed at 79 kobo yesterday, gained 0.72%. Yesterday.
So what do you think?
Sorry, apologies. It gained 9.72% yesterday.
So what do you think will be the outlook for today and the rest of the week? Next week, because today we're hoping. I don't know if we're going to go back to the red zone. Well, if we're going to remain in the red zone, or if we're going to go back to positive territory. From what you're saying, do you think we're going to pull over to the green zone?
Yeah, so we're seeing demand continuing in the banking sector. We expect that would probably continue into today's session. We're still seeing some demand in MTN, so we expect to see some activities in the market there as well. For the rest of the week, we probably continue to see the similar trend that we've been seeing. Some investors will continue to take positions ahead of the results that are going to be declared very soon.
Thank you so much, Afolabi, for that insight into what's going on in the market. And I think we have a better perspective as to what's going on and what to expect today. So that's it for the equities market. And we're going quickly to the fixed income market, where the bond space continued trading on a bullish note, and especially on the short-dated paper, especially on the 2026 paper. But we saw some sell-offs in the 2042 paper. Now, in the Treasury bills market, it was relatively quiet yesterday due to the NTB auction that took place yesterday. Now, we saw few buying interest there. We saw 3 billion for the December 2022 paper bill there. And there were also some buy interest in the almost segment, but more buy interest for the CBN special bills. And still rates dropping down, because as the market goes bullish, the rates are going down. But investors are still not backing out. They're still putting their money there. Sure, there's something they're seeing, but not for retail investors, I think maybe institutional investors are making the most of their, funds that are not doing so much, just lying fallow. So, we're just expecting that maybe it's going to be profitable for equities if the yields keep dropping in the fixed income markets, but we're hoping that the markets will sustain the bullish trend, especially for equities market. But the fixed income seems to be riding on that space right now.
Yes, obviously. I mean, when it's good in one side, it's a disadvantage for the other side. When the market is down, it's a good time to get into the market.
Yes,
so, I mean, it's always like that. Thank you so much, Will.
You're welcome.
We'll do an opening call to London, but that will be after this break. Do join us. It's Business Morning on Channels Television. Welcome back. We now head to London, and after a lot of predictions, threats and warnings, Russia has started invasion into Ukraine, beginning with the capital, Kiev. And before now, the UK has sanctioned some of the companies, Russian companies and individuals in the UK. Well, Juliana is here to tell us if there's been more to that. Good morning, Juliana. What are the conversations following this invasion of Russia, or this Russia's action?
Yeah, good morning, Annie. I think the world has woken up in shock and in fear. I think after weeks of fruitless diplomacy, and we had warnings upon warnings, including forensic data from the West and denials from Putin and the Kremlin, there is war. Putin has invaded Ukraine. So many unverified reports coming out of Kiev at the moment. We know that the airspace has been closed. We heard from Grant Shapps, the transport minister here in the UK, saying no flights will be flying over Ukraine or Russia. We've seen in the past that there have been mistaken planes being shot down. There are some suggestions that about 6 Russian airplanes have been shot down thus far. Prime Minister Boris Johnson will certainly be addressing Parliament in the coming hours. He chaired a Cobra meeting with his top ministers at about 7:30 a.m. This morning. I believe that wrapped up a couple of minutes ago. And now the world waits. What is going to be the response from the West? We have been hearing lots and lots of threats and warnings about sanctions. The UK, unlike any other country in the world, has a huge arsenal of sanctions that it could put toward Russia. We didn't see it. We saw 3 individuals sanctioned and their assets frozen, as well as 5 pretty low-ranking banks. There is so much more. There is almost £1 trillion worth of Russian money tied up in the UK. Will Britain go that far? We just haven't seen it, and we haven't seen it yet in the past. No surprises that all global stock markets have plunged. The Hang Seng index in Asia plunged overnight, as well as stock markets in America on Wall Street. In the UK, the FTSE 100, I believe, is down by about 3%. The FTSE 250 down by about 2.5%. Oil prices have rocketed. A barrel of Brent crude is now trading at about $103 a barrel. So yes, there is fear. Lots of the analysts in the UK are now saying that this is by far the biggest launch of war since the end of World War II. So pretty scary headlines coming out of London this morning.
Very scary.
Annie.
Yeah, but what are some of the consequences of an escalation of this invasion?
Oh, well, we don't know. We don't know what the consequences are. We know that Russia has a budget of about $60 billion on its military. They have amassed about 190,000 troops at the border. Ukraine, let's not forget, is not a member of NATO. It does share a border with 2 or 3 NATO countries. We are hearing that, I believe, Poland has asked NATO and its chief exec, Jens Stoltenberg, to trigger Article 4, which does mean there could be some sort of military response. But I don't think we're going to get that. Joe Biden, the US president, has released a statement, of course, but he won't be sending any troops there. It's very unlikely that Britain will be sending any troops there too. So we really need to see what the response is going to be from the West, because talk is one thing, action is another, especially when we're seeing such a strong force from the Russians. I just don't think Russia is expecting any sort of military force from the West, and it's the military capability, these long-armed missiles that can be bolted from the sea, is the strength of Russia. Is there anybody that is going to combat that? It just doesn't seem clear at the moment.
Yeah, well, and it also paints a very scary picture there for the world because, I mean, the consequences, the effects just spread to energy, spreads to, you know, everywhere. Well, we'll follow the story, Juliana. Thank you so much. We'll talk to you again at 1:30.
Thank you.
All right. So I do know that the Russia invasion due to Ukraine has also affected the crypto market. No man is an island. No market is an island.
Well, and it's extreme fear. I heard Juliana talking about fear, but in the crypto space, we're seeing extreme fear. We've seen the market cap plunge by $1.57 trillion. It's lost that $2 trillion mark by far. It's down 9.24%. Volume traded $107 billion, up about 37.21%. Bitcoin dominance sitting at 42.27. We see Bitcoin yesterday was trying to get back at that 40,000 level, but with the invasion of Ukraine at this point, we see Bitcoin plunge overnight down about 8.47% this morning. Volume traded $32.14 billion. Let's bring in Bjorn Martins now, CEO of Passive Income Token. Hello, Bjorn.
Good morning, Larry.
Morning, Bjorn. So it's global markets are rattled. The crypto space is not left out. So, my friend, tell me, how do you protect yourself in this market?
It's very difficult protecting yourself in these kind of markets. If you're investing in cryptocurrencies, stocks, or anything similar, you always need to be aware that these things can happen. As when Corona happened, for example, you saw the market plunge, massive. But also these market conditions create chances again, where people now can buy the dip basically and really get a chance in stepping up a lot cheaper than they have done before. This way you can really defend yourself by doing a dollar cost average trick. You bought higher than the current values at the moment. That means that you can now dollar cost average your average cost by buying on a lower amount.
And you know, I hear some traders also say that this might actually usher in the crypto winter, the dreaded bear market. What are you seeing?
I won't say yet that we are going to go in crypto winter because of this, as mostly these corrections end up with a big gain, as you've seen in the wars back in the days, the Vietnam War, the war in the Gulf. It dipped massively the stock market, but eventually we gained a lot of traction and we went even more than X2 eventually. So I see it more as a chance, and we go back to the bull season.
Right, but what do you see is happening with NFTs out there and all the play to earn tokens? How are they looking?
And NFTs, they stay a big thing. NFTs is also all about the technology, as we discussed before in previous TVA sendings. And I think the NFTs are going to stay there. They're taking up in value, as you've seen as well. The CryptoPunks, he had a deal for 30 million and he didn't do it, as he see the value in the future is going to gain. And I believe this as well, that the real NFTs, the real value, the play to earn is just starting. We haven't just seen nothing yet, just a little tip of the iceberg. With everything upcoming, the new tricks, the new technology, we're not done for a long time.
All right, Bjorn. Well, I guess this is a time for, crypto enthusiasts and the blockchain, developers to start building at this point, because the market is, totally rattled. But we'll see how everything plays out. Let's hope for peace at this point. All right, Bjorn. Thank you so much.
Thank you very much. Have a good day.
You too. All right, so let's look at Ethereum there. It's lost that $3,000 mark. It's $2,300, down by massive 12.25%. We're seeing double-digit losses all across the market at this point. Look at the top odds by market cap, though. We see BNB there. It's down 12%. The biggest downer this morning, you see Cardano's lost that $1 mark. It's down about 15.52%. XRP not left out, 63 cents, down 11.68%. And we see where you see the top gainers, all stable coins. It's getting real and hot in the market at this point. We see BUSD there, Binance stable coin there, leading the counter in the top 5 gainers. And we see top losers there. CVX there down 21%. You know how we said in the crypto market, once Bitcoin sneezes, the whole space goes down double digits at this point, and rose down about 18.67%. So it's a bloody red market this morning.
You know, that was the same phrase that was used to describe the equities yesterday. It was a bloody red day.
Bloody
So now
red.
it's saying, well, don't worry, we'll get out of it. We're just looking at Russia and seeing the actions and the reaction to it. And I know that, you know, that certainly spread to everyone.
And not to seem, you know, insensitive, you know, these are people's lives. It's not about the markets at this point.
It's not just about the market.
Yeah.
You can say that again. Well, thank you so much, Ladi. And I would also like to use this opportunity to reiterate that Channels Television does not engage in selling of crypto or advertising of crypto in any form or in any platform. All we do is report the market here on Business Morning. So don't listen to them if they reach out to you. It's just reporting of the market. That's all Channels Television does. But that's it on the program. 1:30 we'll be back to give you updates on Business Incorporated. Join us then. And then we'll see you again tomorrow for the final episode of Business Morning for the week. I'm Ini John Mekpa.